I started smoking at the age of 18, and from 18 to 28 years old, I bought one pack of cigarettes every single day. And I was recently very shocked when I backtested how much I would have now if I have saved that money and invested that money, just the cigarette money, into the TQQQ. And the answer is now I would have $3.5 million. $3.5 million if I had invested cigarette money. And no, I'm not talking about expensive cigarettes or cigars or stuff like that. I was just spending back then, this was 20 years ago, around $4 a day into a pack of cigarettes. Now probably it's around 8 to 10 US dollars per pack of cigarettes. And this video is about showing you that very small investments, very small investments into leverage ETFs can produce outstanding results. Again, 10 years of smoking, I could have saved around $130 a month. And if I just DCA this money into TQQQ, I'll now have $3.5 million. Okay guys, I'm going to show you some backtestings, some very small tricks that you can use to have true financial freedom in 10 to 15 years from now. I'm not telling you to save 50% of your salary, although if you can, that will be amazing. But I'm just telling you to save just a little bit, please. Please save just a little bit. Just smoke less or drink less or skip one dining out once a month, okay, and put that money into leverage ETFs, and as I will show you, that money can have a huge difference later in your life. All right guys, let's get into it. Hey guys, my name is Henry. I'm the founder of the Henry Wealth Academy, where I have a 5-hour-long course about leverage ETFs, and I talk about 18 different leverage ETF strategies. So this video is going to be a little bit more simplified, but I'm still going to give you a lot of gold, or no, in this case, leverage ETFs, which is much better than gold as an investment, by the way. And the main theme of this video is that very small differences in your portfolio by allocating just a little bit into leverage ETFs, such as the TQQQ, can have a huge impact in your life. And when I say huge, it's really huge, okay? So one of the backtestings that I'm about to show you is, what if you had invested 130 US dollars, okay, $130 only, over the last 15 years into TQQQ. Come on, anyone can save in dollar cost average $130 a month. Guys, please, just, even if you cannot do $130, just do 50 bucks. And I promise you guys that in 15 years from now, you'll send me a thank you card or you'll pay me for dinner, because really, leverage ETFs, I'm not talking about all leverage ETFs, I'm talking about index leverage ETFs that are leveraging NASDAQ 100, that are leveraging S&P 500. I'm 1000% sure that over the next 10 or 15 years, they'll perform very well. One of the reasons is because of the American supremacy. The American companies are the best in the world. They continue to be the best in the world. And the second is the AI development. Remember, when you are investing in NASDAQ 100, in the TQQQ, you are basically leveraging some of the best companies in the world. I'm talking about NVIDIA, Google, Apple, Microsoft, Amazon, Broadcom, Meta, Micron, AMD, Tesla. You are leveraging and you are a business owner. You are a boosted business owner in the best businesses in the world, okay? So I truly believe that over the next 10, 15 years, these companies will continue performing very well. The S&P 500, NASDAQ 100 will continue performing very well. And that's why I'm such a big fan of leverage ETFs, okay? Now, in my community, I teach about how to deleverage a little bit, how to remove some of the risk of these leverage ETFs. But in these videos, to be honest, I don't have the time, because otherwise I'll make a video that is 1 hour long instead of 10 or 15 minutes, and you will not watch it, okay? So if you want to have that content, you can join the Academy, 7-day free trial, no questions asked if you cancel, okay? So I will never tell you to go all in into TQQQ, but if you just do some freaking dollar cost averaging, just $100, just $130 per month can have a huge impact in your life savings. And nothing compares to investing in leverage ETFs such as the TQQQ. Okay, so let's jump here on the chart. So here we have just a simple backtesting where we just simple dollar cost average for the last 15 years into the TQQQ. And we are just adding $130 a month, which is what I used to spend back then in cigarette money. Okay, if you are a smoker now, probably you spend at least twice of this amount, and you are also wasting your health. So if you just cut some of those bad habits, or drink less Starbucks, or go once a month, cut one dinner going out, and the utility that this money can have in your life is so big, because check this out, the total return is 4,000%, meaning that for every $1,000 that you have invested, you have $40,000. Okay, can you really believe this? Can you just have this in mind? Whenever you spend, you can think to yourself, okay, I can buy this pair of sneakers that is $100, or I can have 15 years from now, I can have $4,000. Which one do I want? I have this, do I want these sneakers? Do I want these sneakers that is $100, or do I want those $4,000 in 15 years from now? Maybe the $4,000 could be more useful. Maybe $1 million could actually be more useful. So just check this out. So what we have here is $130 over the last 15 years, right? If you have invested in the S&P 500, which here is the benchmark, $130 a month, you'll now have $87,000. $87,000 is not bad. But check this out, the same amount invested in the TQQQ will now be $1 million. It's 12 times more. 12 times more than just the S&P 500, guys. And I'm just asking you to freaking dollar cost average $100 per month. Close your eyes, you can open a brokerage account. Most brokers have a recurring buy. You can put a recurring buy order, okay? And automatically on the first day of the month, it buys $100, $200, whatever, like 1% of your salary. I don't know, whatever. Buy that amount in TQQQ and do it for 10 years. And after that, talk to me again, okay? And those people that say that leverage ETFs are not suitable for long-term investing, they just have no idea what they're talking about. Because you need to look at the math, you need to look at the Kelly criterion, which is something that I'm constantly talking about. You need to look at the volatility, you need to look at the returns. Look at the TQQQ chart. Does it look like something that cannot be held for the long term? Come on, does it look like that? An asset that could transform $130 a month into $1 million. Does it look like something that cannot be held for the long term? Come on, guys. The other thing I want to talk about, other than dollar cost averaging, and everyone can dollar cost average, just blindly buy DCA, $100, $200, $300 a month, a small amount, okay? And the rest you put in conservative investments, you put into S&P 500. But anyone can dollar cost average a little bit every month. But if you want to just have an allocation to TQQQ from your existing portfolio, the second thing that I want to share with you is this. You don't need to go all in order to make a huge difference in your life. In this backtesting, instead of dollar cost averaging, I test just a lump sum investment, okay? Imagine 15 years ago you invest $65,000. And $65,000 a traditional investor will put it where? S&P 500, VOO or SPY, which is the column here on the right side, the benchmark. If you put $65,000 into S&P 500 15 years ago, you now have $500,000. From $65,000 to $500,000, okay? How much do you think you need to allocate between SPY, S&P 500 and TQQQ in order to double this amount, okay? So in order to have $1 million, instead of investing 100% into SPY, what percentage do you think you need to allocate to TQQQ in order just to double from $500,000 your outcome with S&P 500 to $1 million, okay? How much do you think you need to allocate? Do you think you need to allocate 50% into TQQQ? 40? 30, 20? No, you need to allocate only 14%. So if you allocated only 14%, okay, 14%, 15 years ago in your portfolio, you allocate 14% to TQQQ and you keep the rest into SPY or VOO, you double the investment that you have just with SPY, S&P 500 alone. Instead of $500,000 at the end of the 15 years, you have $1 million, just because you add 14% of TQQQ. These are the small differences that I'm talking about. So instead of having a portfolio that has 100% S&P 500, you put 86% into S&P 500 and 14% into TQQQ, and you more than double the money that you would otherwise have just with the S&P 500. It's crazy, right? Small differences make a huge impact. Why? Because leverage ETFs, if they have positive expected value, you have a positive expected outcome because, the market most of the time is going up, right? 80% of the time we are in a bull market, 20% bear market. And if you just buy and hold for the very long term, these ETFs perform very well because they are biased to go up, right? So really, just a small allocation to TQQQ, and very important, rebalance every year. Rebalancing is very important, okay? I need to stress this out because if during bull markets, the TQQQ will grow a lot, and then you need to trim it down, take profits by rebalancing, because there will be a point those initial 14% will be 20%. You need to rebalance at the end of the year to bring your percentage back to 14% and put it back to the SPY S&P 500. This is the so-called barbell strategy. On one side, you have more conservative investments, which in this case is the S&P 500. On the other side of the barbell, you have something aggressive and volatile, but also very high return, which is the TQQQ. So guys, with this video, I just want to show you that small allocations into TQQQ can have a huge impact because this thing can really snowball very quickly. And again, you should never go into leverage ETFs. They are very volatile, but a small allocation can have a huge impact. And in my community, I share a video that is over 1 hour long about the 18 different leverage ETF strategies that could produce even better returns than what I'm telling you here about. We also have a 5-hour long course about leverage ETFs, a 5-hour long course about stock market investing, and many other things. It's a community of like-minded people that like to leverage their life, leverage their finances. So I'm not asking you to time the market. I'm not asking you to do any fancy indicators. I'm not asking you to pick stocks. I'm just asking you to save just a little bit of money every month. Just save a little bit, okay? And put it into these ETFs. And if you do this consistently for 10 years, nothing can go wrong. And probably 10 years from now, these small differences, small actions into your portfolio, in saving and putting into your portfolio, can really have a big impact in your financial freedom and your early retirement. Alright guys, if you enjoyed this video, give it a like and subscribe, and I'll see you again soon. Bye.